This is Greg Vincent with Top Producer Radio, talking to John Lawrence, Iowa State Extension economist. And John, some news from USDA today about verification of the H1N1 influenza in swine in Minnesota, but appears may not be a significant market mover, at least on initial impressions here.
Well, certainly Monday's market, while it did trade up there, or at least lower, some months higher, closed on Monday basically pretty flat, just up or down a nickel or less. So it did not appear to shock the market. Variety of reasons why it was not maybe a bigger impact. One, these were found at the Minnesota State Fair. I don't know, and I'm not sure the USDA knows, did the pigs come in carrying H1N1, or was it contracted while at the fair, because pigs can get it from human. And the other thing is the educational program that USDA and the industry has been doing for several months, saying that yes, it is possible for, just like humans pass the flu from one human to another through contact, pigs can pick it up from humans. But what we do know is that pigs, or people, cannot get H1N1 from eating pork. And so it doesn't appear that there's been a panic about pork products, and nor should there be. Pork is safe, and even if these pigs and pigs get the flu all the time, just like humans get the flu all the time, the product is still safe.
So how long before we might be able to tell whether this is having any kind of impact on the consumer markets as you look through the pork movement through the chain?
Well, I think just watch the media and watch the markets over the coming, the rest of this week. Obviously, this is in the news. It'll be on the 6 o'clock news tonight. If it wasn't last night, it'll be with 24-hour news coverage. It's everywhere. Watch and see if retailers reduce their orders in the coming few days. Do pork packers have to begin reducing the wholesale price in order to move the product? Now, those would be signs that product is not trading as well as anticipated. Could this be one of the reasons? But typically, and futures markets are an anticipatory market, typically futures markets react and then wait and see if anybody else does. That did not happen this time.
Okay, and you think we would see this immediately? I mean, it was announced around noon Central Time today. You think we would have seen this, the impact of that today in the trade?
Certainly. People that's been on the floor have, and certainly with electronic trading, news is instantaneous. Futures markets, the market reporters observing the pits or watching online are within a second or two of when the trades are occurring. It's instantaneous, and information comes in to those markets and moves very, very quickly. And yet at the end of the day, the settlement prices were within a nickel of where they were Friday.
Any advice for the producers out there that may be a little concerned about this and may not be convinced that we haven't heard the end of this yet from the market reaction or consumer reaction? What kind of things do they need to do to protect themselves right now?
Well, obviously, if the producers think that this is going to have a negative impact on prices, they need to be selling futures or forward pricing hogs with their packers in some way, shape, or form. If they think it could be worse but aren't convinced, they think it may eventually move higher, options are their tool of choice. So those would be the tools that are out there that are available, same ones that's always been there before. We had hoped that the traders producers would have taken advantage of some of the prices back, if not a year ago, at least about 4 months ago during the summer months when prices were considerably higher than they are today. But if they're concerned of prices falling even further as this news works its way through the media and through consumers and others, then they need to be shorting the market.
All right, that's John Lawrence, Iowa State University Extension livestock economist. Appreciate your time, John.
All right, Greg.